all sitting now with nice full bellies and maybe a little sleepy. But we have some amazing sessions coming up with global leaders. And we'll be kicking off actually with a session on embedded finance titled, Every Company Will Spin Out a Fintech Company. And the speaker for our session will be Alessandro Astone. I'm sorry if I pronounced it wrong, but Alessandro is a leader in the expansion team at Stripe, and Stripe has been making big announcements in the region. Their CEO was at Fintech Abu Dhabi just a couple of days ago, growing very, very quickly in the MENA region. And Alessandro, before being at Stripe, he had an extensive career at global technology leaders, including stints at Oracle and Google. So please help me welcome Alessandro to the stage.
Thank you so much. Good afternoon, everybody, and thanks for having me here. I will try to spend the next 15 minutes to drive through our experience at Stripe in the world of the embedded finance and what we are seeing is happening in the fintech space. And so the topic of the presentation will be essentially how companies are innovating through fintech and how Stripe is helping companies around the world to do that. First, just a little bit of context, fintech and what is happening, the boom of the fintech space is a worldwide kind of trend. One of the main drivers is basically regulation. So everywhere in the world, in US, Europe, even here, regulators are forcing essentially traditional banks to open their system and share their main asset, which is basically customer data, to the third parties. And this is a huge and strong kind of driver for fintech to evolve itself. What is happening and what we are seeing now is that in a way, the traditional closed bank kind of approach is opening itself, and open banking is doing to traditional bank what open software did many years ago to the traditional software space. What that means for customers, essentially, fintech is bringing on the market cheaper or cheapest, cheaper, better, and different kind of products. If you think about buy now, pay later solutions, which again, sort of trend that is common and it's booming everywhere in the world, this is a tremendous kind of solution that was not possible to imagine even 5-6 years ago. And this is something that has been created thanks to the fact banks are sharing basically customer data and are allowing new companies to build new products around it. So what open banking means for you as users, as companies building solutions in the fintech, basically enabling your customers to be provided with more better products, more products, and a wider kind of product offerings. What type of new products? Well, what we are seeing around the world, again, the products that are popping up in the market, very different kind of them. Essentially, we think fintech companies are changing the way the banking services are distributed and consumed. So, first thing important to know, and Stripe is a player in this, traditional banking services are more and more distributed online through online channels. Stripe is one of them, but you can see a list of them there. And that's the first kind of change, quite important. The second one, the same type of financial products that are created to the fintechs are expanding themselves. So products like buy now, pay later solution, instant wire transfer are products of this kind of evolution, something that years ago were not possible, again. And also the kind of consumer targets that are possible to be reached are expanding itself. So not only just consumer on one side and enterprise customers like it was many years ago in the traditional bank, but also SMB, freelancers, students. The sophistication of the segmentation of the consumer space in the is growing, is improving. And so what we have seen over the last 10 years, essentially a number of new fintech companies building new APIs that allow non-fintech companies to integrate financial banking products into their core platforms or website or properties, okay? So what that means, essentially non-financial companies being enabled to easily integrate and deliver financial services into their assets. And when we talk about internet, essentially non-financial companies are enabled more and more to distribute into their digital properties new financial services. Some of the examples here, let's say some kind of normal example, Airbnb is one. So the possibility to being a payment facilitator for a marketplace like Airbnb was literally revolutionary. If you think about you as a flat owner willing to be paid 8 years ago, more or less, when I started to rent my apartment in Italy, it was a nightmare. It was not possible to receive payments through the facilitation of Airbnb. Airbnb at some point was able to, thanks to the open banking, to integrate into its platform the payment facilitation, and it was a revolution. If you look at what is happening now, more sophisticated financial products are available on platforms like Shopify, you name it, are there. Uber, Instacart, Shopify, for example. If you go in the US and you have a Shopify account and you have a Shopify website, it's very likely that you can open a bank account directly through Shopify. You can have your terminal POS through Shopify. You can even have a loan through Shopify directly, okay? So Shopify is becoming more and more, yes, a platform for e-commerce, but more and more a financial kind of enabler for its users. And this is the trend that we are seeing more and more, okay? So platforms integrating financial and banking services into their products and distributing these products to their customer portfolio. Normally, SMB, small players, local shops, and this is the way through which the mass of the market is basically accessing to new financial products through the online economy. Value of this, of course, easy. So for Shopify, for example, again, this creates more relationships, so multiple touch points with their customers, which in turn creates more loyalty and more convenience. Why would we choose everyday companies for financial services? Everyday company means non-financial companies to buy financial services. Well, easy, because essentially when we buy financial services, while we are in a non-financial shop, that shop has more context about why we need that financial services. And that story makes it easier for us to buy that financial service. Again, BNPL is a splendid example of this. So you are on the checkout of your website, you are close to buy a product, and you have the possibility to essentially ask for a sort of loan, installments, of course, and you have an answer in seconds without sharing any kind of data, etc., because your data are already shared in backend thanks to the on-prem banking. First slides that I was sharing with you. Again, I use very often the Shopify example because basically most of the financial services distributed through Shopify are built on Stripe. You can have your bank account and you can access to Shopify Capital, so the lending solution, if you are a merchant there. And Shopify has the context of why you need it and if you are okay to access to those services. By the way, this is a trend that it's not new. Shops and retailers using financial services to improve their numbers is a long story. It simply is the way it's happening now that it's different. Okay, it's through web, it's immediate, and it's global, I would say, in the sense that the open banking is literally opening the customer data asset globally for everybody. So just a couple of slides about Stripe, how we are helping companies to do that. Essentially, Stripe is, you can think it's, about Stripe as a sort of middle layer between the traditional banking and financial infrastructure, banks, networks, you name it, payment methods, and companies who want to integrate those services in their platforms, in their digital assets, so to create their own financial services for their own products, for their own customers, okay? And here is an example. It's not it's a non-exhaustive list of financial products that Stripe essentially distribute to our customers, from the normal easy ones, of the Visa, MasterCard, Amex, to the Google Pay and Apple Pay, here is a thing, etc., etc. All these players are basically using Stripe to distribute their own products to millions of customers having a website, a platform, or whatever. And in this way, in this sense, Stripe is like, democratizing the access to financial tools for everybody. That's the mission of Stripe. Who benefits from this? Well, at different levels, I would say final user customers, they can improve their user experience. They can essentially have more and more products in their offering. They can access to cheaper financial services. The company who provide financial services through this is basically improving the customer journey, improving numbers, etc., etc. Stripe is contributing to what is our mission, which is basically enlarging the GDP of internet. And the network and banks, again, they are not losers in that. If you think about the fact that they are finding in Stripe a distributor towards a mass of users of their customers, this is a tremendous opportunity for them itself. Well, you can ask yourself, okay, but why Stripe is different from any other fintech players? When you think about the financial stack or the different components of the financial stack that today you can access through the API, there are many products. You go from payments to card issuing, to lending, treasury, insurance, etc., etc. And you can find pure players, fintech companies specialized in producing API in each of these bricks. Simply said, Stripe, in its platform, the idea of Stripe is providing within the same platform with all these bricks. You don't need to integrate. If you are a fintech and you want to produce, if you are a platform, Shopify again, and you want to integrate financial API in any of these bricks, okay, in any of these products, and you want to create those, specific product for your customer, you don't have to integrate different players. You can access to Stripe platform, and you can choose the various API that you need to build your own product. That's the way Stripe is different from the other. If you are a platform, if somebody here has a sort of app, platform, whatever, and you ask yourself, okay, how do I get started? Simply said, you start normally what we see. You can start from payments. Okay, so you facilitate payments on your platform. Let's say that you are MindBody. Okay, so a platform that enable people to access to yoga classes or gym classes, etc., etc. MindBody essentially can enable payments for those classes or payments for products related to yoga classes, I don't know, etc. Okay, you start from there, and then you can evolve your offering for example, your studio coach or trainer. So you can provide them some capital, for example, or you can provide them with, I don't know if it's here, the terminal, the POS terminal, through which they can eventually accept also payments via card in a physical space. And if you are a platform and you are thinking of it, you can find many ways to monetize through this. Okay, from the the simple thing that through facilitating payments, you can take a small portion of that payment for you. To if you use lending or card issuing within your platform, Stripe will normally give you a percentage of the loan value or the interchange fee for you that you can retain in your pocket. So this is a tremendous way to expand revenue stream of a platform that offers financial services. Last slide, again, Shopify. Essentially, Shopify, the first time Shopify introduced its financial solution through Stripe, which is called Shopify Pay. So there is essentially they have built their own payment solution on Stripe, and they provide their solution to the users. Was here between Q3 and Q4. They launched in just Q4 2018. And after that, they added more and more financial services for their users using Stripe API in white label. If you look at the numbers, revenues, and the evaluation of the share, well, there is a sort of parallelism that you can see in that. There are many articles that explain how one of the reasons why Shopify value has gone up to the sky is also because at some point Shopify stopped to be simply an e-commerce platform provider, but has started at some point to be also a financial provider. And a good part of their numbers, if you look at the public reports, absolutely come from there, come from the ability from them to get money and revenue from payments, loans, bank services, etc., etc. Question? Do we have time for questions? Okay.
My question was, why is lending central to so many things that we see in fintech? Lending. I think I saw a slide where you had mapped the entire fintech landscape, and the bottom right was this huge corner dominated by, I think, 1/3 of the companies were on lending. You're saying Stripe as well has huge exposure to lending. Is that attractive purely from a margins point of view, or is there more to that? I'm just inquisitive.
Yeah, good question. I think I can share with you our case. The reason why we introduced lending in our platform essentially was a request from our users. So you have to imagine that Stripe, more or less worldwide, we have, well, I cannot share the exact number, but for sure more than 1 million of businesses using Stripe to manage their payments. Okay, good part of that is, an important part of that is in US. one of the most common requests coming from these shops was to have access to money to finance their operations, so working capital. And we are talking about SMBs mainly. So lending is, it was for us a natural kind of product coming from requests of our users. Worldwide, I think it's exactly the same. There is a strong need from SMB, small shops, small business to easily access to working capital. And that's why you see a lot of a lot of fintechs and players active on that specific market. I think also here, one of the feedback that I receive quite often is the difficulty of local companies to access to working capital.
Can I ask one follow-up, if that's okay? I want to ask, is the working capital play that you're offering to your customers, is that born out of your own working capital place? What I mean by that is you accept payments today, you settle in 7 days.
No, no, it's a proper loan, okay? So you receive money, you pay back with the SAT, but normally through your payments. And the beauty of it is that the credit asset, let's say, is quite easy because we own essentially the cash flow. We know we own in the sense that we have the full visibility on the cash flow of that shop who is asking for that. Thank you so much, and have a lovely afternoon. There is another question. Can we?